Cool beans, cool beans. Welcome to the midweek fundamental and technical analysis, guys. Carmen is still traveling. She's traveling in Senegal, so I don't know if she's gonna be able to do fundamentals tonight. However, if not, she will catch us all up when she get back to the States. So, with that being said, disclaimer, nothing that I share throughout this session is considered to be financial advice. Everything that I share throughout this session is for educational purposes only. Cool beans. All right, let's jump into it. Starting out with Dixie, the dollar index as always. If we look back to the pre-week analysis from Sunday, I told you guys exactly what I wanted to see out of the dollar, and I drew your attention to this blue shaded area here, which is a hourly inverse fair value gap, right? Um, from the weekly point of view, I told you guys that if we broke below that hourly inverse fair value gap, that I would anticipate and expect price to pull down into Friday's discounted rate, which is the black levels that you see on the chart. I told you guys that I would anticipate it pulling down to those levels if we broke below that hourly inversion fair value gap, right? We see that blue level there, which is consequent encroachment of that weekly wick, right? And those were the levels that I was anticipating price to pull to if we got a break and a close below that inversion, hourly inversion fair value gap, right? So going back to the daily, I told you guys that if we found support on top of that inversion fair value gap, right, that I would expect price to run the weekly buy side liquidity that we seen right here, right? That's still marked. And I told you guys that if we broke and closed above that aggressively, that I would expect the next buy side liquidity to be ran, which was right here. And if we ran and closed above that buy side liquidity, I told you guys that I would expect us to run the next buy side liquidity and potentially run into this daily volume imbalance. That's that reddish or pinkish, whatever color you want to call it, shaded area right here, right between these two wicks. That is a daily volume imbalance. So breaking this down to the 4 hour, we can see we pull back down into that hourly inversion fair value gap, right down into this SIBI, right? And fair value gap as well, right? And we push back above that hourly inversion fair value gap, found support and continue to run um to the upside as anticipated, right? We wanted to see price not break below the inversion, the hourly inversion fair value gap, so you can get a better view here, right? That is this inversion fair value gap, right? It became an inversion fair value gap once we broke and closed above it, right? Filled it in, broke, closed above it, and now we treat it as an inversion fair value gap, right? We also see the fair value gap here that we pull back down into after breaking above um the inversion fair value gap. We pull back down into um this SIBI, BISI, buy side imbalance, sell side inefficiency, and found support, right? Failed to break and close below the hourly inversion fair value gap, which is indication price is going to continue higher. We break back above it, right? After we come down into it, we break back above it here, right? And then price pulled back down, but we failed to break below the low that we just created within that fair value gap in inversion fair value gap, right? And then we see price push back up and close back above it, giving us the confirmation that we want to see that price is indeed bullish, continuing to stay bullish. And now from here, the top of that inversion fair value gap, we anticipate price running that weekly buy side liquidity and on to the next one, right? And to close the week, I am expecting Dixie to push up into that daily volume imbalance, which is that pinkish, reddish shaded area that we have right here, right? That is exactly what I would want to see out of the dollar index to close the week. We may get a push up in there tomorrow, and then the rest of the week we sell off to pull back down into Friday's discount array, right? That's these black levels here from Friday's price. Take you back to the daily so you can see that, right? Friday's candle, Friday's PD array, right? 62% here, 79% here. That blue is that consequent encroachment of that weekly wick. So I'm anticipating price to reach up into that volume imbalance and reject it hard, right? And then we start selling to the downside, or either break through that volume imbalance, right? And close above it. If we break through it and don't close above it, that's not enough for me to continue that bullish outlook to the upside. Although I do, like I said on the pre-week analysis, I do expect us to run that yearly high during the last quarter of the year, right? However, if we break above that volume imbalance, I would need to see us close above it, not just break above it. I would need to see a close above it, right? I want to see an aggressive push above it and close above it. And then my bias would be confirmed to the upside to go ahead and run the yearly high. If we reach up into it and close below it, right? Reject it, reject breaking and closing above it, then I will expect us to pull back down into uh today's PD array, right? I mean, well, not today, Tuesday's PD array, right? From Tuesday's price action. And depending on how price reacts to that PD array level, then I would expect us to continue to the downside. If we break through those levels aggressively and close below them, then I would expect us to pull back down into Friday's discount array, right? If we find support at those levels, then I would expect us to swing back up. So we just gotta let price tell us what it wants to do. So once we got the break, once we got the respect of this hourly inversion fair value gap, right? That was confirmation enough for me that price was going to run this weekly buy side liquidity from last week and run this buy side liquidity from May and reach up into that daily and volume, the volume imbalance. So that's what I expected out of Dixie this week to start the week, and that played out beautifully according to what the market showed us, right? So as I said on the call, um, for the pre-week analysis, price literally talk to you. You just have to listen to what it's telling you. So Sunday in the pre-week analysis, I told you guys for Euro USD that I wanted to see price. I would have my most strongest confirmation would have been if price respected the lower level of this weekly fair value gap, which is this blue shaded area here, right? That's a weekly fair value gap. I told you guys on the call, you can go back and look, that my strongest confirmation would be if we respected that, right? Second strongest confirmation would be if we respected consequent encroachment of that weekly fair value gap, meaning we pulled up, retested it, but didn't break above it and close above it, or never even reached it in the first place, and started to sell off from there, right? Basically, never reaching it and closing below the weekly fair value gap was my second strongest confirmation. Um, and I tell you guys, if we did break above the consequent encroachment of the weekly fair value gap, that last line of defense basically for the sell bias was the PD array of Friday's price range, right? So I've taken it off now, but I had that PD array mark from Friday, right? We know that 62 was there, and there at the 79, right? And I told you that would be last line of defense, right? If price pulled up to there, it was still my bias to the downside will still be in place as long as we didn't break above and close above that PD array, that 79% of that PD array. As you can see, we didn't even reach the consequent encroachment. Um, Yesterday we sold off, right? And created this city, sell side imbalance, buy side inefficiency. So I marked um, yesterday's price, right? These black levels is the premium array, PD array of that price. So I am anticipating for price to pull back up into yesterday's premium array, right? And I still want to see us take this sell side liquidity to close the week. So I'm anticipating price to pull back up into a premium, right? To give smart money that opportunity to buy this sale down to here at a premium price, right? And take their profits here at this sell side liquidity. That's what I'm anticipating out of Euro USD for the rest of the week. Um, I'm basically expecting the same thing out of futures across the board that I was for ES, right? I'm expecting E-mini Dow to pull back up into yesterday's premium price, right? And run us lower to this sell side liquidity here around 34,006, right? For NQ, same thing. I'm expecting us to pull back up into yesterday's premium array, right? And continue to pull down into the weekly um discount array, right? Because we look at a weekly time frame for NQ, we see this is last week's price range for NQ, right? And whereas on ES, right, we got to pull back down into that PD array, right? But we didn't get the PD array for NQ retested. So I'm expecting for price to go ahead and pull down to that PD array, that weekly PD array for NQ to close the week. However, I am anticipating price to pull back up into yesterday's premium array to give smart money that opportunity to take this short, right, down to the weekly PD array and take profits there. So that's what I'm anticipating for futures across the board. Same thing with Euro, GBP, USD, and well, Euro USD, GBP USD, and NZD USD. I'm expecting the same thing out of those three across the board as well. So with that being said, um, my analysis to close the week is for dollar to um reach that daily volume imbalance um at 105.125, and but I'm anticipating a pullback down into um yesterday's discount price, right? And even though I'm anticipating a pullback down to that discount price from yesterday's price range, we have to see, of course, this sell side liquidity taken out first, right? So if I was shorting the dollar, I would be shorting the dollar from consequent encroachment of this week, right? Stop loss above the high, right? And if I get stopped out there, I would take another short from the volume imbalance down to this sell side liquidity, right? Which is 104,593. So that's what I'm looking at out of the dollar, currencies, and futures moving forward for the rest of the week. Metals, I also want to. I'm anticipating a pull back up into yesterday's daily um premium array for silver and for gold, right? But I do want to see us continue to the downside to close the week out with, especially if we get that bullish move out of the dollar. I know we haven't looked at all in a while for my Telegram subscribers, but y'all already know we've been waiting to break above this gray shaded area for a while now, this weekly fair value gap. We broke above that aggressively. That's y'all know that's what I've been telling y'all forever. It's on 1,000 YouTube videos. So we finally got that aggressive break and close above it. So now we're longing oil up to I'm longing oil up to $100. And once we reach oil there at $100, then I'll be looking to see how price reacts to that $100 level, right? Um, so I think this was the last time we looked at oil. I marked this weekly PD array, right? We on the weekly time frame now. I marked this weekly PD array. I told you guys that I wanted to see us pull back up into that PD array and how price reacted to it. If we broke and closed above it, then I expected us to get back above this, to get above this weekly fair value gap right here and close above it. And if that happened, then I was anticipating us to run higher um to $100 price target. So everything is looking beautiful for oil. And at this time, I will end the technical analysis and attempt to pass it over to Carmen so she can give us the midweek fundamental analysis. It's all yours, Carmen.
Okay, cool. Hi, everybody. Oh man, it's been a long time since I've been on a Zoom call, and apparently now I'm trying to lose my voice. It's okay. All right, so I am going to share my screen. We're going to um go through and look at um the Forex Factory calendar just really quick. And then I'm just going to talk about a few things that I'm starting to notice, starting to see. And then I'll let you guys go. So we started out this week with the holiday, so technically this is a short trading week. So with this being Wednesday, technically, it's the second trading day. Wednesdays are typically the busiest trading day, and you have a lot of volume in Tuesday and Wednesday. So this week we had a bunch of speeches to start. We have a bunch of speeches to actually continue through the week. So tomorrow, one thing that everyone should be paying attention to is anytime you see news pop up, whether it doesn't even really at this point in time matter which bank or which economic center it is. Anytime you hear any central bank or economic center talking about their reserves of foreign currencies, it's super important that you listen to see what they're holding, what they're transitioning to, and what they're transitioning out of. So we will have this news coming out in, according to Eastern time, maybe 7 hours or so. And it's coming from the Swiss bank. So remember, those offshore banks where people tend to go to hold money, and sometimes it's not even for the sake of taxes. Sometimes it's for the sake of um, being able to hold your money in a different currency, being able to hold your money in a currency where the banks are actually allowed to diversify assets in a different sort of way. Everyone always thinks that offshoring money always has to deal with taxes, and sometimes that's just not the case. Actually, if you start to look now, a lot of US citizens are um, starting to make decisions about whether or not they actually want to stay US citizens. And so those countries who actually have laws that actually favor US citizens are actually more favorable than the US in general, people are actually starting to consider those for um, some type of residency or naturalization eventually, if that is allowed. So with the Swiss, the one thing to remember is that people have for a long time considered Swiss banks to be very safe, to be a place where you would want to hold your money. So, for the sake of that, and for the sake of the notion that goes behind it, that is definitely news to pay attention to. We are always going to be looking at unemployment claims. Between now and next November, unemployment claims are just going to be a number that we're going to look at, not necessarily on a week to week basis, but it's just an important factor because as we're talking about the election, as we're talking about just all of the different things that come with an election, just all of the back and forth, the banter, the politics of it all, these things come up. Inflation comes up, jobs come up, the speed and the growth of the economy, the GDP comes up. So even though unemployment claims is weekly, we don't necessarily have to pay attention to it on a week to week basis. However, it is something to look at and just make note of when it does come out. So the US has speeches coming out, or sorry, Fed members that are speaking for the rest of this week. So they're minor speeches, minor meaning that they're not something that the media is going to be focusing and putting all of their attention into. So anytime a Fed official speaks, or anyone from the Open Market Committee speaks, those speeches are always on the website, and you can always go and pull those transcripts as well. Um, and then G20 this weekend. Friday, there's not really a whole lot of news. Actually there is. I just lied. Consumer credit. Um, that news item is not orange or red, but for me, that is an orange or red item. It is an orange or red item for me because whenever I see consumer credit, I am starting to think about what the economy is going to start looking like in the next quarter, the quarter after. What is it going to start looking like next spring, next summer, when the economic cycle tends to slow down a little bit? before ramping up again before the election, because if you have consumer credit, if you have consumer credit, consumer debt, if you have debt that is growing at an exponential rate, let's put it like that, um, the way that it has been growing, and you have the money supply, you have M2 money, you have the money that is just out there free flowing, you have the money that is sitting in people's bank accounts, just sitting there. Um, and then going back to the jobs, if jobs aren't growing, if accounts are dwindling and debt is growing and people aren't able to access credit, that is going to become a very huge, huge problem. Um, the way that credit has been, yes, Tracy, drying up lately, and the way that debt has been rising, people are in a position where they're going to be in huge trouble. You guys have probably just heard Mr. Level say it a lot of times, and I'm getting ready to only say it one time. Go back and listen to the Zoom call, maybe, I don't know, maybe 7 weeks ago, but I've said it a lot. Pay down your credit cards. Nobody on this call, I mean, this is slight financial advice, but it's slightly common sense too. If you are carrying credit card debt right now, the burden and the weight on your shoulders as far as your interest rates are concerned just got a lot heavier. Um, the way that credit card companies have the freedom and flexibility to change rates. If you have a credit card right now, and let's say your expiration date is 2027, and you get something in the mail that's just blanketly addressed, open it, because it's probably something from your credit card company telling you that the terms have changed, and you probably want to read those terms, because in those terms somewhere it's probably going to tell you that they are going to adjust your rate and have the ability to adjust your rate from 90 days after they sent it to whatever rate, uh within reason, so to say, that they want to. The Fed gives credit issuers some leeway in how to do these things, and people are going to get crushed. It's always fun when the market is in a boom cycle. Everyone's making money, everyone loves it, but no one knows what to do with their money when we're in that cycle. That is the time where you're taking profits and you're putting it into something or putting it somewhere where when that cycle is over, you're good. Everybody coming out of the negative oil situation in April, like, should have been great. After that oil, after oil went negative, after the markets dipped and we had that flash crash and then the market started recovering again, like, everyone at that point in time should have been like, everyone who says they were in the market, okay, cool, that's great. Maybe you were, maybe you were not. You want to sound cool, maybe, I don't know, whatever. But um people who were invested then now should be good. You should be great. You should have had enough put in at that time. You put money into the market and took money out slowly but surely, just taking profits along the way. Use those profits and pay down debt. Use those profits and just put it off to the side somewhere. You'll be fine. Now you have people who are literally sitting back trying to figure out, oh man, what am I going to do? Or, oh man, my credit card interest rate just went from 21% to now it's 31%. Or they're seeing like all these huge fluctuations. People sat back and waited, thinking, I'm about to have my student loans like released. I'm not going to have to pay them anymore. So people sat back on that. Those interest rates are still there. The back interest, all of that kind of stuff, like all of the money that just accrues with any type of loan that's on deferment. Um, all of these things are coming up now. And with that being said, I'm going to like, it's somewhat similar. I just have some slight topics to talk about. This is going to relate to jobs. It is going to relate to cycles. So really quick, mask. COVID, RSV, flu, cold season is coming up. You guys know my healthcare background. You guys know how much I love slash hate this time of the year. Um, we are ending the third quarter of the year. Enjoy the last good month of the year because October is next month. We all know what happens to the market in October. We all know what happens to the federal budget in October. We all know what happens to the economy in October. And we all know what happens to people and healthcare, period, in October. Masks are coming back. If you have not traveled internationally recently, well, let me inform you. Currently I am back in the United States. I just want to I was in 5 countries recently, and let me tell you, masking is coming back. Um, there is a lot of talks overseas about requiring people to take a new COVID vaccine. If you didn't hear what Biden said during one of his lovely press conferences outside of the White House, he said that he was actually going to like incentivize pharmaceutical companies to make another vaccine, and it was probably going to be mandatory. There are a lot of healthcare workers who are not going to take this vaccine the second time around. I can tell you because I've heard it firsthand. A lot of people are not going to do it again because you're starting to see that there are effects from some people, and I'm not being on the conspiracy train with this, I'm just being straight up, that have had issues, people who have had no issues whatsoever, clean, healthy eating people, exercise, run, jog, marathon, triathletes that have had issues, and that was the only other thing they did. It's not everybody, but here's what I'm going to say. If you are in the market for just wanting to find something interesting that is going to fatten your portfolio, I mean, if you want to go that route and not be ESG and all that kind of stuff, pharma, healthcare, and energy are those areas I'm looking at for the fourth quarter. Um, Fourth quarter is the fall and break your hip quarter. Sounds horrible, but anybody who doesn't take a vaccine, it's fine because guess what? Pharmaceutical companies don't just make pharmaceuticals. Johnson and Johnson makes baby stuff. They make Band-Aids. Kimberly Clark, Stryker, they make hospital beds. Guess what? If someone falls and breaks a hip, guess what? Guess who is actually going to supply a hip? Yeah. All the healthcare companies that are out there are attached to pharma in some sort of way because they make bio implants that have medicine and grafting. So yeah, it's going to be very hard to get away from pharmaceuticals. And the reason why I said fall and break your hip is because of the weather. Um, if you haven't paid attention to the weather, we are on tropical storm or tropical system 13 or 14 right now. We're not even near really the end of the hurricane season yet. Had to fly around one of those to get back, and it's not fun. So air care, air travel is disrupted. So energy, the amount of fuel that is going to be needed for airlines, they're going to have to pull a lot more from their reserves in order to cover flight diversions. Also going into the fourth quarter of the year is just energy intensive anyway because it gets colder. It's also more intensive in October, also tends to be a little bit more horrible for energy on the consumer because prices are higher because they're switching oil types. So if you don't do your maintenance on your car, then you probably wouldn't know what I'm talking about. Or if you don't pay attention to the smell of the gas you put in your car, you probably wouldn't know what I'm talking about. But you know, oil has different weights, so you need different. oils for summer versus winter. You need different gas types, summer versus winter. All of these things are going to be happening all at the same time. So everyone always wonders, why is October just so bad? It's a lot of reasons why October is just so bad. So um, that's what I'm looking at. We are getting ready to enter into a new cycle. So just be prepared. We are in a very cyclical, in a very, how can I say this? We are currently in a very um, typical cyclical pattern for the US right now, meaning pretty much every period of the year, every season of the year, certain points and times of the year in the United States typically have things that come along with them. And right now it's very typical. Um, so again, pharmaceuticals, healthcare in general, energy, masks are coming back. Um, so that's all I have for you guys. And I'm going to turn it back over to Mr. Levels.
Cool beans, cool beans. We appreciate that sauce as always, Corman. I'm glad that you made it back safely. I know you enjoyed your travel around the world. Glad you're back with us, giving us this sauce, keeping us informed on global economics and the fundamentals in these financial markets. And yeah, man, it's lovely to have you back. Thank you, thank you, thank you for everything you add to the team.
No problem. Oh, really quick, we are going to resume 10Ks on Monday. I did not forget about those because I still have GOLD to go over for 10Ks. And then we'll start 10Qs the Monday after. So just to kind of let you guys know really quick what I'm going to do next week. Monday, we're going over the last 10K. Wednesday, we are going to just do a very broad view market analysis, kind of what I just said about looking at cyclical things. We're just going to go very broad, kind of look at the see how different sectors play out. Friday, I'm not sure yet. Maybe picking a company, just kind of doing another start to finish of how I analyze a company, what I look for. If you guys have any suggestions for what you want to see, let me know. And then the following Monday, we'll start 10Qs. We'll probably go over some recent 10Qs, maybe Nvidia had a good one. We'll do Tesla and then a company at random. So I'll just pick a company from the list that had a 10Q that came out within like the last couple of weeks or so, and we'll go over that. So we'll just do a 10Q each day of the week after next.
Cool beans. I'm excited about that as well. Let's get to it. Cool beans. All right, guys. Well, that will conclude tonight's midweek fundamental and technical analysis. I appreciate you. I appreciate you guys tuning in, coming out to get this knowledge and empowering yourselves. Always. Let your family and friends know you love them while they're still here, please. And as always, peace and love, everybody. You know.